Okay, guys, so let's say now that we have a trade idea in the markets that we want to get into a position and try to make a profit because we've gone through our fundamental analysis. We have a trade idea, for an example, to sell the euro against the South African rand. And let's say the idea is based around high inflation in South Africa. We're expecting an interest rate hike by the South African central bank. Let's say we've looked at our technical analysis. Let's say we have that trend line I was showing you, and we have the moving average swapping over, and we're looking at selling the currency pair. What we need to understand now is that when we go into our trading account to take that position, in order for us to make sure that we don't risk too much of our account on a single trade, we need to understand about how much a currency pair fluctuates by on average over different time periods. So if you're trading intraday, like you want to be a day trader, or if you trade over weekly time frames or monthly time frames, you need to understand how much does the currency pair fluctuate by over a daily period, over a weekly period, over a monthly period, to make sure that your stop loss, which is something I want to show you, which is basically going to stop your trade if it goes against you at a certain price, to make sure that your account is protected so we don't be risking all of our money on a given trade. So percentage moves historically become very important. This is our volatility analysis, but we need to understand pips, points, and percentage moves in an exchange rate to know when we go into the next video, boom, after this video I'm going to show you now about units, lots, profits, and loss, which is basically how much you're winning or losing on a trade each point that the exchange rate moves in value. This is really going to start to make a really good idea in your mind about how much we need to pay attention to our risk management strategy. So I'm going to run through some videos with you now, guys. When you look at pips, points, and percentages and exchange rates, then it's going to lead on to another video of units, lots, profit, and loss. Then it's going to move on to another video, volatility, so how we calculate how much a currency pair has fluctuated by on average over different time periods. And then we're going to move on to risk management, and then we're going to move on to order types when we're getting into the markets. Now, some of these videos I want to show you are actual videos for my advanced course. So I'm going to be in a different setting. I'll be introducing myself to the camera, talking about it, but it will make sense once you go through the videos exactly what I'm talking about. And all this is basically coming up to the risk management strategy of making sure that our accounts are really protected from a trade, and we know where to place our stop loss, we know where to place our take profit targets, so we are protecting our capital and trading professionally when we have a trade idea to get into the market. So I hope you'd enjoy, and I'll see you after. Thank you.